All right, utilities providers, including Constellation Energy and Vistra, recovering some ground in pre-market trading after shedding double digits off concerns about Chinese AI DeepSeek. Now, Jefferies analysts in a note out this morning saying, quote, data center deployment is very likely intact in the medium term as the race remains on. The question for us remaining, just how swiftly will further competitors release new, more powerful AI models? Let's talk about that and much more. We want to bring on Paul Zimbardo. He is Jefferies U.S. Power Utilities and Clean Energy Research and Managing Director. It's great to have you here. So talk to us just about the magnitude of the drop that we saw in so many of these utilities names yesterday. Is the worst behind it, or are we likely to see more pressure just given the cost and energy efficiency that we have heard about DeepSeek?
Yeah, no, thank you for having me back. So hopefully the worst is behind us, but I don't think we're all clear yet. And just putting things in perspective, some of these stocks have been up 20 to 50% just to start the year to date in January. And if there was a little bit of exuberance, and as you remember when we were last chatting, that kind of the AI thesis was going to lead to significantly higher power contracts. And this is kind of the first wrinkle in that trade that we've really seen over the past year. So hopefully we can kind of resume some of that upward trend, but this really does kind of cast some uncertainty into that thesis, which has become an investor's base case.
And we're kind of painting a broad stroke over utilities, but are there some players within the space that are better positioned than others, even with the efficiency as the prioritization for how data centers will be operated and how, if we see, of course, a sweeping overhaul to the way that inferencing technology runs through those data centers and the compute power that's necessary, that all that energy and the utility power that goes into it is still sustaining the overall kind of output that we're looking for here, and which utilities are perhaps the best insulated?
Yes, absolutely. So to break apart the traditional utilities from the power companies, one of the utilities that is more insulated is PPL. So there you are building a lot of new natural gas in Kentucky, really just to replace kind of retiring and older resources, as well as very modest demand growth. So to the extent there's data centers that proliferate in Kentucky, that would be incremental to the outlook. So we think that is one of the safer ways to play it. Within the power world, we like Talen. So this is a large nuclear plant in Pennsylvania called Susquehanna. They already have an existing data center deal with Amazon. Amazon is actually on site building that facility. So there's really just one core asset for that company. And given that existing relationship, we think it's likely that kind of that relationship gets expanded over time.
Are you reevaluating the energy needs right now of U.S. AI? And I guess just given what we do know, what do you think that looks like?
It is the core question. So to set the stage a little bit, artificial intelligence and data centers specifically are about 75% of the demand growth projections. We've had flat demand growth for 20 years in this country. So kind of all of our eggs are in that one basket to a degree. Electric vehicles, port electrification, other ones are pretty small. So I think the question is the hard one to answer of what really happens later into the 2020s and 2030s. Do we have this large boom? Because as we've written, we don't think that the data center companies really pull back on deployments 25, 26, 27, even 2028. But you do need to start to question kind of, does that trend accelerate in the future? Does it kind of stabilize and maybe even see some moderation of demand growth out into the later in the decade?
What type of kind of capital expenditure profile are you expecting from utilities companies in order to meet the demand that AI is bringing towards their industry?
Yes, the average utility probably grew its kind of infrastructure base maybe 6-7% in the past. We have many companies now that are talking about double-digit growth, some as high as 15% infrastructure growth through the early 2030s. So really unprecedented levels. And to compare that with some of the slower growth regions of the United States where you don't have data centers, that's more like a 3, 4, 5%. So like significant increases. Just how long does that trend last?
Paul, when you take a look at where Constellation is, you take a look at where Vistra is this morning, should investors be a buyer at these levels, or do you think there's more room to fall?
We would definitely be a buyer of Vistra. So what we have done, we look at kind of draconian scenarios, assuming there was no data centers. Constellation would have further downside. It would have pretty significant further downside versus a Talen, we think is cheap ex data centers. Vistra cheap today. So like those are kind of the ones that we'd be looking at the most. A Talen, followed by a Vistra. Even after the drop yesterday, Constellation kind of pre-open was just trading around our price target, just to give a magnitude of how much it's outperformed to start the year.
Paul, thanks so much for taking the time here with us today. Really appreciate it.
Thank you.